Hello and welcome to the Mogo Company Webcast. My name is Ben Shamsian, Vice President of Lytham Partners, and today Greg Feller, co-founder and president of Mogo, will be taking us through their slide presentation as well as answering some questions. Mogo trades under the ticker MOGO on the Nasdaq. With that, let's get started. Greg, the floor is yours.
Great. Thanks, Ben. As Ben mentioned, President, co-founder Mogo. For those who are new to our story, Mogo is a Canadian fintech platform focused on long-term wealth building, powered by a unique combination of innovative financial products and wealth payments and lending, along with a disciplined capital strategy anchored by Bitcoin. We're building what we believe will be one of the most distinctive investing platforms in North America. So today I'll walk you through our recent Q2 results and give you an update on how we're executing on that strategy. So just starting with our Q2 results, we had a very strong quarter, profitable, high margin, and very much aligned with our strategy. Reported positive net income of 13.5 million. Our wealth revenue was up 48% year over year, payments up 23%, positive adjusted EBITDA margin of 11%, positive cash flow, and we ended the quarter with book value of 81.6 million, which is about 341 Canadian a share. And just a reminder, all figures are in Canadian dollars here. And we had cash, securities, and investments of over 50 million dollars on our balance sheet at the end of the quarter. I think what makes Mogo unique in the market, there's obviously a lot of Bitcoin treasury companies out there, but I don't think there's any Bitcoin treasury company out there that's doing what Mogo's doing, which is this focused on a dual compounding strategy of a high growth fintech with focus on wealth and payments, looking to really have a dual compounding strategy of a Bitcoin treasury business alongside there. And really our target is 50-50 in terms of building both those businesses in parallel. I think that ultimately that's going to drive a longer term flywheel to enable us to both monetize and continue to invest in Bitcoin. We did launch, and we are not new to Bitcoin. We actually were the third publicly listed company on Nasdaq to put Bitcoin on our balance sheet after MicroStrategy and Block. This is in 2020 and before Tesla. We then launched a more formal Bitcoin treasury program in 2024. And then recently we started executing on that as we started to monetize the largest position in our investment portfolio, WonderFi, which was a Canadian crypto exchange that we helped create and recently announced that it was being acquired by Robinhood for over $200 million. And as part of that, Mogo is going to be getting just under $30 million of proceeds from that transaction. And in fact, we monetized about 14 million of those proceeds recently post quarter end. Um, uh, on the intelligent investing side, our wealth business is anchored by our platform that we call Intelligent Investing, and that is the brand name. It is a subscription-based platform designed to help members build long-term wealth through consistent contributions and disciplined holding. And it's really built on a simple insight that most investors underperform the market, not because they lack access to the right investments, but because they lack the right behavior. And we believe fundamentally that a lot of these platforms are actually built for speculative gambling type behavior. We believe a majority of investors, of the retail investors on these platforms, and there's a lot of these platforms out there right now, are actually losing money. So that's not just underperforming the market with a positive return, but underperforming, that is actually losing money. And so we really see these platforms as sort of top of the funnel, where those investors that have gone on there lost a lot of their money and realize that it's very difficult to beat the market, are looking for an alternative solution, and that's really where we come in. We are building we're rebuilding our platform, I should say, from the ground up, and be AI native, leveraging a number of AI native tools like Cursor. And again, our model is built to reinforce discipline, not engagement. And it's a subscription-based model, meaning that there is no incentive to push trading, to push speculation. As Buffett and Munger like to say, show me the incentive and I'll show you the outcome. So we are aligning our incentive with what we believe is the right long-term outcome for our customers. Uh, in July, we announced that we were starting the process to get full crypto trading regulatory approval at Mogo. So today we are regulated for equities trading. But if we are successful at getting this done, which we believe we will be, at this stage, we would become only the second company in Canada to have both crypto and equities trading. Canada is still dominated by the big Canadian banks who are more conservative than the US banks. So we still believe it'll be a while before they get into crypto. And that just creates a big opportunity for players like Mogo. And that is going to be a big focus for us over the next 6+ months here. Turning to our payments business, Carta Worldwide. This business is today exclusively focused on Europe. And that business is scaling organically nicely at about 15% on volume, and revenue's been growing at over 20%. We recently completed a full migration to Oracle Cloud, which will help improve scalability and cost efficiency. And we also see an opportunity to bring stablecoin payments into the Carta platform, and we're investigating that right now. We have a number of multinational clients that we believe could benefit from this, and so we think Carta is well positioned in the European market to play a role in that space as well. Turning to our financials, as I already touched on some of this, but we had a really strong quarter in both showing wealth and payments growth. Gross margin expanded to 72%, positive operating cash flow, and positive EBITDA margin. And this really was one of our most structurally aligned quarters, high quality revenue growth paired with strong margin performance. Um, and this is just really highlighting that in more detail. You can see where the growth came from. We report both interest revenue and subscription and services revenue. And that if you sort of dig into the subscription services revenue, you can see where our main focus is on payments and wealth, and we're seeing strong growth in those products. Our lending related business is coming down this year due to a recent rate reduction the Canadian government put in place. But we believe that headwind will really dissipate as we move into 2026, and we can have lending not be a drag on our overall corporate growth. As I mentioned, positive adjusted EBITDA and positive cash flow from operations as well. So a very strong quarter overall. And then turning to our balance sheet, very strong balance sheet, $50 million of cash and investments. The majority of that right now dominated by our investment in WonderFi, which, as we mentioned, is in the process of being acquired by Robinhood. And we actually monetized just under half of that stake in the open market to really sort of get that liquidity on our balance sheet sooner rather than later, and we've started to deploy some of that liquidity into Bitcoin. WonderFi and Robinhood expect the transaction to close before year end, so we expect the rest of that monetization to come in by then as well. And as I mentioned, we see a big disconnect, obviously, in the market in terms of valuation, even relative to our book value. And that's quite frankly why my brother and I have been buying the stock pretty regularly over the last 18, 24 months, and why the company has also been buying back the stock. On our Bitcoin treasury strategy, as I mentioned, this really is a dual compounding strategy, and we really think this is a unique strategy. This is not a Bitcoin only treasury strategy. This is not an operating company that's going to be, dominated 90+% by Bitcoin treasury either. We did get a $50 million authorization, and we've started to execute against that. And we really see the foundation of the company built around our Bitcoin treasury strategy. That will become and is now our Bitcoin is our hurdle rate, which means that effectively any investment in Mogo or anywhere else will be compared against the expected return of Bitcoin. And that's how we will, keep that discipline and manage the investment either in Mogo or Bitcoin. And then you sort of layer on the regulated multi-asset platform of equities and crypto. And then the product integration. We have on our roadmap, as I mentioned, looking at stablecoins on the payment side. We're looking at bringing in a 60/40 S&P Bitcoin allocation in our wealth platform, which we really believe is the increasingly the right target mix for the next generation. The ones just coming out of college, my kids, etc. Should have we believe should have a lot more aggressive mix into Bitcoin and alongside of an S&P strategy. And then we're also looking at a Bitcoin loan on our lending business. And so we really see crypto, Bitcoin, and the broader crypto ecosystem as a foundational level infrastructure, an asset class, a reserve asset class, global asset class that the next generation wants to get access to. And Mogo wants to be at the heart of that, especially for Canadians. And ultimately, we see this as a strategic compounding loop where platform integration helps drive user growth, which helps grow operating income. And ultimately, that enables us to, continue to invest and expand our Bitcoin treasury operations, and the cycle continues. So that's really the goal with this dual compounding strategy. And we're, super excited about the future. So with that, Ben, I'll pause and see if, turn it over to you for any questions.
Yeah, sure. Thanks, Greg. I want to talk about the crypto strategy, but sort of as it relates to your wealth management business. What intelligence are you getting vis-a-vis your wealth business that sort of helps you better develop the crypto business?
Well, I'm not sure I mean, I think, look, it's our wealth business is really focused on the next generation of Canadians. So it is focused on, there's 3 trillion in assets right now sitting in mutual funds in Canada, paying 2% management fees, earning half the return of the S&P 500. And so, as we say, the issue is not that Canadians are not actually saving for retirement. The issue is they're being put into bad products, right? These mutual funds dramatically underperform the S&P, and the difference over a lifetime of compounding at 5% or 10% is the difference between being able to retire and not retire. It's over a 10x differential. And so our initial focus has been really getting that next generation into the S&P 500. And anybody even putting in $100 a month can retire with millions if they start early enough. And now we really see, because we're focused on that next generation, that obviously that generation understands crypto, understands Bitcoin and its role as sort of digital gold, and they want access to this asset class, and the traditional banks just aren't providing it. And so we obviously think we're well positioned to be able to do that. And now with the regulatory clarity that we've got in the US, we see that spilling over more into Canada. And we think now is the time for Mogo to expand our capabilities into crypto.
All right, that's helpful. Just staying on the wealth business, it was up 48% in the second quarter. What is the draw, that's bringing customers to this business? It's mainly younger people. What base are you capturing, and why do you think you're seeing the success here?
Yeah, I mean, I think it as I mentioned, what's happening is platforms like Robinhood and others are have really, brought in a lot more retail traders into the market, and they have sort of changed the game for investing and for retail investing, and they continue to expand, that funnel. And then there are a lot of other, players out there, eToro, others, etc., doing the same. But what we believe is actually happening is a large cohort of those users ultimately are speculating, gambling, and not really adhering to sort of Buffett Munger type strategy of long-term investing. And that's resulting in not just underperforming, but in losses for a very large chunk of those users. And so those users then are getting disillusioned and realize they have no real path under that strategy to make money. And we can put them on a path, with very little money to be on track to be millionaires by the time they retire. So as if you kind of look at the deck that we went through, you'll see that we actually have some of these people on our platform that are on track for 100 million, 200 million, 400 million. And so that's what's getting them excited. And we sort of see the top of our funnel, those users that have already realized that it's not that easy to beat the market, and they're looking for an alternative solution. So we're not trying to convince those users that, want to go and speculate and gamble on some of these other platforms that no, you're better off doing the right long-term investing strategy. Instead, we're really going after those users that have already tried that and failed. And there's an increasingly large cohort of those users doing that. And really, nobody else is going after that segment. And that's really what we're positioned to do.
Okay. Well, Greg, thank you for your time here, and thank you everyone for watching. If you have any questions or would like to schedule a meeting with Mogo, please send me an email at shamsian@lythampartners.com, shamsian@lythampartners.com. We have additional presentations and fireside chats coming up next, so please stick around for more. And thank you everyone, and have a great rest of the day.